Good afternoon. Am I audible? Yeah. Okay, so a lot of what I'll be showing has been covered in part or whole earlier, which is a good sign because it just shows the commonality of strategy at the bank. I will therefore spend some more time on parts which are unique to the presentation. So how are we doing on our GPS agenda? So our growth story continues. We are making progress on each of them. Overall, our disbursement volumes are 2x what they were over the last 3 years. We've seen the contribution of unsecured high-yielding products go up by 600 basis points. The contribution, 690 basis point, and we've seen the mix improve by about 600 basis point. Our NPAs almost best in class at 0.52%, and we are looking at some projects which will keep driving differentiation and keep us ahead in the game. I'll cover them in the next slide. So what has gone well for us? So we have been over the last 2 to 3 years running transformation projects across the entire bank. So if we talk of Project Unnati, it's a project running across home loan, mortgages, home loan, auto loan, personal loan. And this is what's been driving the growth. This is what's been driving the customer turnaround time and also our efficiency matrix. All these projects which I'm discussing are about 50 to 70% done. So there's still more to come out of these. Project Zenith, I think it got mentioned in the morning, which is our customer lifecycle management project in the card space. It is helping us get a higher wallet share of customers and gain market share in the overall industry. Sankalp, this is a project which also has been run in CBG and now is being run also in the small business banking vertical, which is essentially comprising of two businesses, working capital up to about 75 lakh average ticket size and business installment loan. So we've gone live with the business installment loan and almost 90% of our business comes out of the digital ways which we've been able to drive through this project Sankalp. The working capital part of the journey is being built and it will go live over the next 6 to 9 months. Project Kanban, a very fine example of how internally One Axis is working. This is a project in the merchant acquiring space which has taken us from number 4 to number 2 player in the industry. We'll discuss about it in detail a bit later. So investment in digitization and technology has been ongoing. We have upgraded our card systems. We've upgraded our other systems. We brought in bring your own device to log in applications for loan anywhere, any point in time, bring it by using your own device. Self-service options on the internet banking, mobile banking platform. We've been leveraging analytics. I think the whole session in the morning, which Balaji and Avinash took, showcased our edge in terms of how we are driving cutting-edge analytics, which is helping us pre-qualify customers, getting more customers, and also helping us in the debt management space. So what are our key success differentiators? We have a well-diversified, almost 4.2 trillion retail book. It's growing at 22% over the last decade. Business mix is optimization towards higher focus products, which are really the higher yield products. We are maintaining and probably growing our market share, market leadership in cards and payment space, aided by digital and very strong partnerships. Some of them you saw in the first sessions. Universal underwriting, account aggregator to keep us ahead in the game. Bharat strategy, the whole session on that in terms of how it's bringing ecosystems and large customer pools for us to be able to lend to them. And we'll talk about our better risk outcomes, best in class numbers compared to peer set. We clearly stand apart. So overall, our loan book at 4.2 lakh crore has been growing at 22% over the last decade. Retail assets now comprise 58% of the overall bank asset. That number was about 50% 3 years ago. The mix of higher yielding assets, which is personal loan, credit card, rural and small business banking, is now up to about 39%. That is growing year on year because these products continue to grow faster even in this year. So clearly, the business is growing, the optimization of yield is happening, optimization of product is happening, and we are seeing better yield products grow faster than the book. Overall business mix optimization is driven by higher growth in focus products. Within the mortgage segment itself, we are looking at growing. We have grown loan against property and affordable home loans faster than the home loan itself. Their contribution to overall mortgage has gone up by about 340 basis points for LAP and 186 basis points for Asha home loans. Within the wheels vertical, which business has really turned around, the used car penetration is up 10% over the last 3 years. We use strong analytic capabilities, which is driving higher growth in small business banking, PL, and cards. 82% of our disbursements are through our bank proprietary scorecards. 75% of card sourcing and 59% of the personal loans sourced are from existing to bank customers. Yeah, some example of digital product offering, digital journeys offering across each of our products. So if you look at digital home loan, that digital home loan sanctioning is up 70% year on year. 81% of the cards are issued through digital or phygital medium. Digital personal loan contributes, these are end-to-end personal loans, these contribute 55% of our overall disbursement. I mentioned about digital business loan as part of the Sankalp initiative. 88% of the business loans are originated digitally or physically. 60% of car loans are approved digitally. Cards and payment space has seen us grow well. We have increased our market share over the year, really on the back of growing share in the retail business. Even this year, the spends are up 81% YOY for the first half of the year. The fees of card and payment to the overall bank fee has grown to 27%. That's the highest we've seen over the last few years. This business clearly is a growth business. Along with partnerships, we expect this business to continue the growth momentum. Some example of our partnerships, you may have seen it earlier, Vistara, Airtel and Flipkart. Flipkart now, our base is over 3 million. These contribute 31% of our overall card sourcing. Our stock share is 11.4%, though our incremental share month on month is now over 15%. So clearly we are making gains here. Quick one on Citibank. Post the integration, Citibank is the marquee card issuer in the country. It is the most vintage card issuer in the country, highest number of transactions who are digitally engaged. This will strengthen our proposition because they are largely in the top 8 metros. We are present across the country. We'll have access to some of their global best practices. So if we look at overall summary, our ENR of the combined book will grow 41%. Cards outstanding will go 28% and annual spend per card will be up 11%. UPI space has been seeing a lot of growth. We are one of the largest players here. We have increased our market share to 16%. Our VPAs have crossed 4.25 million. Our technical decline rates, which is a signal, which is a clear sign of how strong our technology backbone is, because the number of transactions here keeps multiplying, is the lowest in the industry at 0.05. The same number for top 30 banks is about 1.5%. Importantly, a lot of transactions done through UPI also find its way in using of our scorecard, fine-tuning of our scorecards, and that helps us qualify and pre-approve more and more customers. We have marquee partnerships, Google Pay, Phone Pay, Amazon, WhatsApp Pay, all across. We have partnership with large players. Merchant acquiring business is a good example of how One Axis internally is at play. We are now the number 2 player in the merchant acquiring business. And how did we go about this? This was really part of our Kanban project. The whole approach really starts with the retail liability, going out and scoping a particular market. They come and tell the credit card and the merchant acquiring business team that this is a city or this is a zone where we think more current accounts can be had. It has a good population of retailers. So that's when The team gets into action, the feet on street go out, install a POS terminal at the retailer shop. At the same time, there's a digital journey to onboard them, and current account opening is mandatory for each of the POS terminal we install. So there is collaboration between retail liability, current account team, merchant acquiring team, and once the transaction starts flowing and history builds up, we also offer lending solutions to this same set of customers, so which is provided really by the small business banking. We are almost dispersing about 100 crore worth of loans to this set of customers. Not a very large number, but it's a small ticket and high margin business. So clearly, one axis at play internally within the bank. Universal underwriting has been mentioned earlier, alternate data, use of alternate data, account aggregator, and how Bharat banking strategy will dovetail into the growth of retail assets by providing us access to large ecosystems in RUSU markets, typically which are under-penetrated. So this is what will keep us growing in some of these markets. Overall, we have a very strong risk management framework. The board articulates the risk appetite, which is then built into policy, product parameters, and then gets monitored. And as per TransUnion data as of June 22, this is how our delinquencies. Sorry. So this is how our risk management framework works. Board defines the risk appetite that gets built into the retail lending policy, product parameters, and then is continuously monitored. And the outcome is seen here. When we look at the bureau data from TransUnion, this is how our delinquency 90 plus tax vis-a-vis competition. All products are lower. Products, home loan is 0.18% of what the overall peer set delinquencies, and here we are comparing it to the peer private bank averages. So how will we continue to win in this market? Clearly, customer acquisition is key, using our proprietary acquisition strategies, using our partnership funnel, which will expand beyond cards to other products. Clearly state-of-art technology platform, which are built for scale and are resilient. Digitization, where we mentioned open for all, being able to lend to all customers for all the products, full stack API embedded with finance and personalized offers to each of the customers. Risk management continues to be a non-negotiable as we continue to grow and win in this market. Clearly, we would want our portfolio to remain the way it is. It's certainly far better than the industry. Overall, Citibank will give us a leg up. It'll depend. We're working on a successful integration. It'll help us unlock the value, and also there'll be cost synergies at play as a lot of cost gets denominated then in INR. So in summary, we remain focused on delivering healthy growth in retail by business mix optimization, early leadership in universal underwriting, account aggregator, and Bharat strategy to accelerate retail lending growth further. We'll continue to have better risk outcomes than peer average led by a strengthened risk framework. Thank you.